The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 17th. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, you can always send me an email, steve@tfnn.com. In that heading, just put radio show question. I'll be happy to get to that. And, of course, inside the Tigers Den, well, any ping will do. So let's go ahead and get this show started on Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 170 points at 21854. That's the number she's printing. The S&P's off 24, trading at 2444. NASDAQ 100 down 1.5%, 88 points to the downside, printing at 5829. Russell 2000 off 12 points, semis down 21. New York Stock Exchange down 0.75%. You've got gold up $10. The volatility index, the spot volatility index, I don't have to tell you, but it's up 25.6% right now. Another one of those one-day rates of change greater than 10%, at least as of 1:08 p.m. So those of you that are short or playing the volatility index, let's say we get a bad close, you know what action you should be taking. And that's called book those gains. If you take a look at silver, it's up 11 pennies. That's 0.6% to the upside. Light sweet crude up 11 pennies as well. Leading the charge here to the upside, dollar-wise, is China Lodging Group up $8. Alibaba up about 7. You've got Aerie Pharmaceuticals. Not sure I pronounced that correctly. AERI is the ticker symbol. That's up $3 or $4. Hershey's is up $3, trading out at 109. To the downside, it's Priceline off $33. Amazon down 13. Google off 11. AutoZone down 7. Biogen off 8. Tesla off 6. So we have plenty to look at individual stock-wise. Of course, what I want to look at is what you want to look at. The first order of business is let's go take a look at the equity futures contracts out here. We'll pop up the daily charts on our screen. And what you can see here is that each of the equity futures contracts, you've got the S&P, the ES mini in the upper left. This is the daily chart we're looking at. Inside the NQ on the upper right, lower left, YM, the Dow. Lower right is the Russell 2000. So what we know as we speak right now is each of these equity futures contracts are trading below their TAS daily profile lows. Those would be support levels. In other words, support has broken. Where is price then likely headed to? And we'll flip these to the weekly time frame charts out here. But as we take a look at this, what your eyes would be focused on would be the next lower swing point. And that takes us back to a few days ago. The actual day is going to be August the 11th. Now, at this stage of the game, the ES Mini is trading into it, meaning the high of that day was 24.46. You're at 24.42. If, in fact, you close below 24.46, you would anticipate at least a test of the low of that session, which was 24.30. It could even be busting out those lows to make an A to B equals CD to the downside. So that's a pattern that is intact until we see some type of support. I don't see some type of support on an intraday chart. We'll go take a look at the weekly because there may be some support levels. But inside the ES Mini, as an example, the 1-to-1 A to B equals CD pattern, should the 2430 level get busted out, is 2415. The 1-to-1.272 would take you all the way back to the lows of June 29. And that would be in the range of about 2402, 2400. Inside the NQ, not really so much of an A to B equals CD to the downside. I mean, I can force one in here, and it would look like this. Let me go ahead and delete the old one that was out there. I would say it would look probably something like this. So the 1-to-1 on it takes you to about 57.37. That would clearly be in Gartley buy territory range. 56.80 would be the 1-to-1.272. The case of Russell 2000, that's probably the one to keep our eye on the most. And the reason is that this has generated a Gartley buy signal. You and I took a look at that, and it did that when it completed the 1-to-1.272-ish, A to B equals CD to the downside. It did that on the lows that were formed back on August the 11th, got down to 1363. That very next candle session created that little three-river evening or morning star, I should say. Nice bullish reversal signal. So what we know right now, and the reason why to watch the Russell 2000, because there should be a level of support, a clear level of support at that August 11th low, which is 1363.60. 10-minute delay on this chart out here, so the accuracy of the price at 1369 probably not accurate, but we're probably not too far away from it. So you want to see if that level of support fails, then that next question would be, well, where would the Russell 2000 head to? And you can do it a couple of different ways out here. One would be if there was some real volume behind the move, you would say that there is a second A to B equals CD pattern that formed, with the A point being August 8th, the B point being August 11th, and the C point out here being August the 15th. And the 1-to-1 there would give you 1337. Has not occurred yet, but if those lows get busted out, that would be the pattern that would be in play. That would be the price projection inside of the Russell 2000. Now, I mentioned we would go ahead and turn these over to the weekly time frame charts out here. I thought I could do it all in one. No, I got to do it one at a time. So as you take a look at the ES Mini, another level to be paying attention to is going to be the 2419 area, because that is the bottom of its weekly box. Now, inside of the NQ, upper right-hand panel on my screen, that level of support would be 57.34. Now, in the case of the NQ out here from a weekly time frame, this is a brand new profile formed this week, and this is a bullish structure. It's both a bullish structure and a bullish profile. Bullish profile simply because it formed above the prior weekly profile, meaning the low of the current is above the low of the prior, and the high of the current is above the high of the prior, and bullish structure because that point of control, which it's trading into right now, 58.21.55. The importance of that point of control is from a weekly perspective. So intermediate term time frame traders out there are most comfortable with this price, both buyers and sellers. So we don't know. This can also act as a level of support. If, in fact, this 58.21 area does not, and I don't have anything on my shorter term chart, so maybe a 10-minute chart out there, but we won't rely upon that. If this level gets busted through, watch that 57.34 level. And that's inside your NQ. Sponsored by TFNN. Steve Rhodes, TFNN. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 175. S&P is off 23. Bummer in Barcelona, that's for sure. Hey, if you like music, one of my favorite tunes out there, Barcelona Nights. Who plays that tune out there? Somebody probably in the audience knows. Barcelona Nights. It's a great tune out there. In any event, they're not having a great evening this evening. So the Dow off 175. Let's go cover the volatility index and what you should anticipate, or what you're going to be looking for. Right now up about 24%. Where did I put that chart? Oh, I probably actually put it towards the front of the screen. There we go, one-day rate of change. So here's that famous chart. Otmar Liebart, that is correct. Great tune out there. I'm sure you can probably just catch it on the internet somewhere. If we take a look at the blue arrows on my screen, those denote days where the one-day rate of change inside the spot volatility index is plus 10% or more. And what you'll notice on each of the following sessions out there, you either had a bounce sideways move or a bottom. Sometimes that bounce can be pretty substantial, pretty significant out here. It especially gets to be that case when you get up towards that plus 35%. Right now you're at plus 24%. That just needs to be above 10% out there. That's why I say, for those of you that play the different volatility index vehicles out there, you're best off just simply taking that bread and saying, man, what a great opportunity when you have those one-day spikes. It doesn't mean that it works 100% of the time, but it works so often. This is a game about being able to make money, and you can say, instead of getting a single or a double, you probably had a grand slam, and it's time to, tip the hat out there and consider taking those profits. Now, don't know how the day is going to end. Anything can happen. You get down below 10% out there on the one-day rate of change, and then you would have missed your opportunity too. So probably best to take a look at putting some stops in place on that trade, even intraday, in case there is some kind of reversal in the market. So that's the one-day rate of change out here that we take a look at. If I look at this, is also another interesting chart out here because of the ability for it to identify bottoms in the market. So as we can see right now, this is on a closing base when you see a line chart on my screen. Then from a closing basis, the S&P 500 is close to the low on a closing basis was 24.38 back on August 10th. You're 24.44. So, we're in that area of testing that low. We can't call it a double bottom, although it's kind of okay to, I guess, try to use that that language. A double bottom really isn't a double bottom until you know that you busted out the prior highs out there. So it's really just a test of a swing point. But that's not what is so important out here. What is really important is taking a look at the spot VIX index and comparing that to the 3-month, which is the VXV out here. When you simply divide those two, what you'll notice, and we'll go back and take a look at the actual futures contracts inside of the VIX index because we want to see what those things look like as well. But when you get up towards that one level, and right now we're at 0.95, so it's really darn close out here. When you get the combination of this, you get the spot VIX index over 10%. You can see the green arrows on my screen on a closing basis, what they actually meant for the S&P 500 out here. Remember, this is a era of nothing but geopolitical type events out here. And they all have resolved themselves in the same way, time and time and time and time. And you can see this here about a dozen times so far over the course of the last 3 years. So you want to be paying attention to that. And that just leads you back into the spot volatility index and the ratios that we're looking at. So if we just simply go ahead and take a look at, you've got the spot at 1468. You've got the next, so 1474, I should say. So you've got the spot VIX index trading above the next 3 futures contracts. Not November and not December, which are 15 and 1505 respectively. That is going to resolve itself. That is not normal. Now, if you get the spot VIX index really above to close above 1505 today, then we're going to have another day in a row where things are so lopsided, and I know things might just look just horrible, just horrible out there. Bad news all over the place. Just telling you that is when you get that spot VIX index and the futures contracts are saying, no, I don't think so. This is one of those time periods where really you want to be able to look. I just want you to anticipate what to be able to do in the markets and the patterns that are present when you see that occurs. The spot VIX index trading above all of its futures contracts since 2012, I think, is the last time that I ran that test. It's only happened 11 times. Maybe last one, which was a few days ago when we did that 35%, that might have been number 12 out there. So it's not an event that occurs often, but they all resolve themselves the exact same way. So pay attention. Let's keep our head in this game versus all the other crud and stuff that's out there in the media. Okay, so that's really all that we'll take a look at the summation index for the New York Stock Exchange. We're not at new lows yet in price, but certainly that advanced decline oscillator is at a higher low. That would be something else to keep your eyes on. It's nothing to pay attention to yet. It won't be unless we see the New York Stock Exchange start to get even uglier, which it absolutely can. There's not anything, as I say. Well, I say that. The Dow right now, I just see, let me put this on the screen out here. The Dow may have, let me just update this, where you start to see Stevie's black lines, right? I've got a red line, I got a black line. There we go. I got the black lines now, with price starting to move lower with less relative energy out there. And if you don't think that's important and understand how to trade that, well, then just take a look at the 2 prior instances when that occurred and then what the results are. So it doesn't matter whether you flip the chart one way or the other. Now, in this case here, you don't have the bullish reversal signal. In the other cases, the action, Jackson, was when you saw the bearish reversal signals. Most recently was out at the highs here on the trading session at about 11 o'clock, 11:30 it looks like. This was on what day? This was on August the 16th out there when the Dow made its intraday high, its intraday top. So you do have that pattern that's present. Won't mean a thing if it ain't got that swing. In this case here, that swing would have to be a bullish reversal candle. It's not there, but if it does show up, that is the cavalry communicating to you and I. Now that, you'd really be benchmarking the ES Mini if you're trading the spot volatility index. Let me hit the update here and see. Now, in this case here, we don't have that same type of pattern. We did at the top, so I'm saying right now that is present. We really don't have that same type of pattern. You might notice on my screen it says letter G, singing the key of G. I don't really think that's so active because you made a 6-wave move to the upside, so I'm just going to go ahead and turn that off. But you would be watching for that same pattern to show up inside of the ES Mini as well. Okay, let's take a look at some other things out here, right? Let's take a look at the move in gold, 1291.90, and silver. Let's take a look at gold first. Let's come over and take a look at the market profiles. I guess we'll have to do that when we get back from this break. So we will. I'll check my emails. I'll see if there's any requests. Requests get priority around here. That is, what do they call that? Call ahead seating if you send an email. Steve Rhodes at TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Dow's off 172, S&P down 23. So priority seating goes to Rob. Rob writes in, says, "Hey, Steve, I bought SPY puts yesterday with the S&P up 10 points. I just sold them back with the S&P down 25 because the SPY filled that little gap and hit the 50-day exponential moving average. The question is, since we know this will bounce tomorrow, if the VIX stays up over 10%, where should the S&P bounce to or find resistance?" Now, that's a great question, and that's hard to answer. I'll answer the best that I can right now, because the answer would really require us to first, Robert, it would first require us to see some type of bottoming pattern inside of the ES Mini on a 30-minute time frame chart. We don't have that yet. Doesn't mean that it won't happen. So that would be the first thing that I would be looking at. And then the second thing that I would be looking for inside of this is what happens on any bounce as price gets up to Stevie's red line. And so we're going to need to, so to answer that now makes no sense at all, because you don't have that kind of bottom in here. So that's what I would first be looking at. If what tools do we have available to us right now where maybe we can make that type of decision out here, or something to look at? So, Rob, what I would say is, here is the 5-hour chart for the ES Mini. And what we can see here is, as price was moving higher yesterday inside the ES Mini, when you went ahead and bought those puts, on the 5-hour chart, you'll see that Stevie's blue line, the bottom panel of my chart out here, was the price oscillator, and it was nearing the zero level out there. And what that said was, when that occurs, is that price would pull back and test the red line, which in fact it did this morning, and at about 8:30 that gave way. And when that gave way, we then had a falling price oscillator below zero. So when that and that's a bearish pattern. Now we can see right now that this is just a retracement off of the prior lows, but you've got a wide-ranging bar on this 5-hour time frame. Markets don't end on wide-ranging bars out there, but nonetheless, the zero line on that price oscillator is really important. And a bounce, a good bounce, could take you right back up to that zero level. Right now, at 1:32 in the afternoon, that price point would be 24.60. So that would be I would say, the upside potential. But those numbers are going to change. It's going to be a different number when we come to tomorrow morning at 3 o'clock, or maybe even this afternoon. But that would be one level that I could provide to you. If we go take a look at market profiles, we tried doing this when we opened up the show. There's nothing that you or I could use at the moment for a 30 or 60 minute profile. If I go to the 4-hour time frame, the bottom of that box, that would be resistance. That's 24.57. So you got, what was it, 24.62. Here you've got 24.57. The bottom of the daily box is 24.59. That's another potential spot out here. But all of that won't matter until you get some type of reversal signal inside the, I'd like to say, on the 30-minute time frame, and then we could come back and answer that. So it's a great question. I know where you're going with it. I think what I would recommend, if you're trying to trade that way, is just certainly get access to at least the equity futures contract. You can do that certainly if you don't want to pay the exchange fees by opening up a Nadex account. I believe that gives you access to it, and you can try to identify the patterns utilizing that system. And there may be other ways to do it as well. That's just one that comes to mind and is part of the TFNN family. So, Robbie, thanks for hey, nice profits. Congrats on that trade out there. And let's go to question number 2. Question number 2 from Marie. Hi, Steve. I'd like to start a position in Kansas City Southern Railroad. It seems to be correcting on light volume after breaking out. I'd like to hold this long-term years if possible. Thanks, Marie. Well, Marie, thanks for writing in. Let's go take a look at Kansas City Southern Railroad. KSU is the ticker symbol. And the first thing we're going to do, Marie, in answering your question, because take a look at multiple time frames. And multiple time frames meaning daily, weekly, and monthly, since you were looking at holding this long term. So that's the first thing that pops up on our screen out here. If you're watching us on Tiger TV, you can utilize these market profiles to assist you in that thought process. Now, you can see out here on the daily basis, let me punch open the daily chart out here. And I'll go look on my other system. But you can see yesterday was a bearish shooting star. So that was, and you're having some follow through to the downside. When you see a shooting star, unlike a hammer per se, when you see a shooting star, you really like to see follow through on that next session. And a shooting star, is a resistance point. Meaning, if KSU were to close above 109.13, then 109.13 should become a support level for you. But since you're getting follow through, and you said on light volume, yesterday it made a high with 1.5 million shares. So far, as of 1:35, you've pulled back with 600,000 shares. So it certainly is lighter volume out here. Their question was, you'd like to hold this long term. You'd like to start a position. You're just saying I'd like to start a position, okay, but you're not giving me a price point, and I don't know if you're asking me for a price point. But if you're saying you'd like to start it today, I would say hold on. I don't see a reason why you would start that today. If you're looking in the really near future, utilizing this daily market profile, I'd look at 103.60 as a price point, a potential price point versus the 105.84 where it's trading at right now. Could even be 101.80. We won't know till we see how price continues to pull back into the area. That's the message of the daily time frame chart. If we take a look at the weekly, what we can see is what Kansas City Southern is trying to do. It's trying to break above a weekly profile. This box here on the weekly time frame is slightly bearish from the standpoint of that center of the box at 102.73 being closer to the top of the box, which looks like is where we're trading at right now. 105.92 is the actual number. We're 3 pennies above that level. I'm going to just one other thing here. Let me just do I could do that live on the system. So I just punched up the daily chart on my other system for you, so we can just do this. Gives us some other tools. So what this also tells us is when that shooting star was forming yesterday, price was moving higher, doing less relative energy. Now, what we also see here, Marie, is that price has come down and found support at my red line level. So this still has a rising price oscillator above zero, 105.43. Watch that, because if price moves down below that level, closes down below that level, that is then confirming for you, hey, you've got that further retracement going. So I'd use the daily bottom of the box out there. Is there any other pattern? You don't really need another pattern as this thing was making a high out here. I don't know what this was singing in, but we'll go ahead and take a look at those wave counts out there. Now, at this stage here, you'd have to see I would have to say that as far as the singing goes, it's only in probably wave number 2. So it looks like even on a daily basis, it does want more upside potential, but I'd wait between yesterday's signals and today's signal. Real quickly, I'll just throw this on a weekly time frame chart, just see what pops up here. Also, price moving higher, doing less relative energy. But you can see the A to B equals CD pattern, and we'll see if that is confirmed. Price right now did find support during the week at 103.34. That's the weekly red line area. Marie, when we get back from this break, we'll finish it off for you, but the information provided so far should be pretty helpful. Hey, on the weekly basis, I'd say 102.73 is the number to look at. Steve Rhodes from TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're taking a look at Kansas City Southern out here. Let me go find those charts. Where'd they go? Here we go. And for Marie, who's looking at trying to hold this for the long haul. Now, when we take a look at a monthly chart for Kansas City Southern, it had formed the swing point the month of August 2016. So a year ago, we're in August 2017. And when it did that, there was 21.5 million shares. And a couple months ago, back in June, that area was passed with 23 million shares. So on a monthly basis, this has a confirmed A to B equals CD to the upside. The one-to-one price projection would take you to the 117.54. I would say at this stage here, in all likelihood, what KSU is trying to do is do the 1 to 1.272 dance, which gets you to 128.01, which really gets you back to its all-time high from November 2014, which was 126.49. So 126.49, 128.01, that would be the range, and that's the reward risk that you would be doing on this trade out here. Now, on the monthly time frame chart, the buy point on this really is the top of that monthly profile, which is 101.24. This doesn't tell us whether price is going to pull back to that level or not. But the 102.73 is the center of the box on the weekly. And because of that reversal pattern that we've seen on the daily, 101.08, 102.34, even 103.60 would really be your buy point. So that's what I see in the charts as we take a look at them right now, Marie. Best of luck to you on that. And thanks for writing in. I don't see any other requests at the moment, nor do I see anything inside the Tiger's Den. So let's go back to what we were going to do, which was take a look at Goldilocks. Now, in the case of gold, which is trading up $8.30 right now, gold is trading into some fairly stiff resistance. You'd think with the issues potential with what's going on in Barcelona today, as an example, the havoc inside the news media that we have inside our own country out here, the atmosphere that with the VIX trading up 25% or whatever it was, that you would think that maybe gold could take out resistance. Well, it hasn't. That resistance level is 1294.60 or 1293.60. We're not going to squabble over $1, Mortimer. Not at all. So it hasn't been able to take that out. So therefore, am I buying this move higher in gold as, hey, we're ready to continue moving to the upside? The answer is no, I'm not. I'm close to buying it, but I haven't yet signed the contract. If it closes over 1294.60, different deal. Of course, then it's got the swing point at the 1300 level, so that really becomes the area where gold would need to close above. So it's even higher than that. Why? Because that is a resistance area. This is a daily chart, and although you can't see it on this bar chart, and a reason why you don't want to use bar charts, you do have this little bear sash bar candle on April the 18th, and that says, or I'm sorry, that was April the 19th. That sets up the high of the prior session out here right now as resistance, 1300.60. So if you're still a long gold, hey, great. As long as it doesn't close below 1266.20, that's the beauty of the new profile that formed yesterday. You stick with it. But you really want to see this thing clear 1300.660 in order to be able to get your skirt in a tizzy, so to speak out there. Now, why am I close to buying it? Well, I'm close to buying it because of really your friend and mine, the yen. And if we take a look at yen futures, they're really close. They're on the verge of crossing over, closing above Stevie's red line. Now, it couldn't get knocked down by the end of the day out here. And if that's the case, well, then that's really telling us the same message that this so-called breakout inside of gold just isn't really breaking out, and that resistance is a solid area of resistance. T-bonds, on the other hand, they're clearly above Stevie's red line. I'm going to defer to the gentleman in the yen coat out there, and as really being the signal that would either confirm or say, not so fast out here. So we're close. But I'd say at this stage of the game, no cigar. Had a request to go take a look at light sweet crude for Ruby. So let's go do that. Let's switch over Ruby. I'm going to go ahead and put up Stevie's synthetic contract only because it's going to provide us with some better information out here, if that's possible. And on this chart, we're taking a look at a 60-minute time frame, 240-minute, daily, and weekly. On the 60-minute time frame out here, we've seen that it's given you at least a intraday time period signal of a bottom, El Bottomo. And it's done that by being able to trade above a TAS market profile, 60-minute. Here, I'll go ahead and blow this up on the screen out here. And as you can see that there was a profile that formed at about we'll call it 10 o'clock this morning when that formed. When that profile formed, it was a bullish structure, center of the box, closer to the bottom. And now price is trading above, and it's been tested several times, 46.88. So, Ruby, I don't know which side of the trade you're looking for on this, but as long as light sweet crude continues to trade above 46.88, it should make it to its next level. What's its next level? That's an excellent question. Its next level out here, you're going to have to go with the prior swing point. That prior swing point would be from about 10 o'clock yesterday morning, and that would be somewhere in the range of 47.45 to 47.99. Now, as it's doing that, if it continues to move above that area, you're looking at 47.91 as being a real key area. That is the bottom of the daily box. Now, I don't know if you're long or you're short, looking to get either one of them on a bounce. The resistance zone should be 47.91 out here. If, in fact, instead, can't say in fact, but if instead light sweet crude decides to cruise lower overnight, decides to trade below 46.51 at the moment, that's the 60-minute bottom of its box out here, one that has a bullish structure. So when a bullish structure fails, nothing more bearish than that, that would then say to me that you would anticipate light sweet crude could head to the 44.29 area. You're at 47.09. So, Ruby, does that help you with the questions you had about light sweet crude? And if not, let me know, and I'll go ahead and give you that information. We've got Top Dog in the den, and Top Dog asked the question, Steve, what is a good entry point for Apple for a long position? So let's go over to that 3 time frame chart out here as soon as I can find it again. There we go. It says TAS 3 time frames. And let's go ahead and put Apple up here. AAPL is the ticker symbol. You're going to see daily, weekly, and you're going to see long-term monthly chart out here. So what you know and I know, top dog, about Apple is that it is trying to complete at least a 1-to-1 A to B equals CD to the upside. That would take us, and this is the weekly chart, by the way, we're looking at, that'll take you to at least 169. Now, there's no reason for Apple to stop at 169. I mean, it might be tired. It may never even get up there. But right now, that is the price target area, weekly chart, not telling us when. But 169, the uno to uno. However, I would say that more likely than not, based on its current price pattern behavior, that really what it's targeting is the 190.63 level. You may have heard people talk about, hey, they think Apple's going to $200. Where do they get those price targets? Hey, they follow the same lightning bolt pattern that you and I do. And they know the 169 is in play. 190.63 is in play. When we get back to this breakout here, I'm going to try to answer that question. Hey, Steve-O, where's a good buy inside of Apple? That's for Top Dog. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So we're taking a look at Apple here. We're trying to, the question was, hey, can we find a buy point in Apple? So there's a couple of things. If we take a look at the daily chart out here inside of Apple, you're going to see that this is a bearish structured box. Price has gotten back into it. Volume of about 16 million shares. Last time that volume pushed down was August 10th, 40 million shares. So not a lot of volume inside of Apple as we speak right now, not as of 1:54 in the afternoon. Now, it actually found support where it should have as well. And this is where it's a little bit difficult. And that is that it's found support at Stevie's red line. 158.61 is the number right now. So it's that's still bullish. It's not clear to me out here. Where's the better buy, though, longer term? It's probably not here just yet. It could be here. I can make the case that it is. I'd rather see the market profile look a little bit different than this. If it closes below Stevie's red line, all right, so I'd say don't rush into it. Then what you're really looking for is the 155.12 level, and that is what the daily time frame chart is showing us. Now, we talked about this weekly time frame and the longer-term price objective that is out there. It's not Friday, it's 30, but I'd really want to see, hey, what's happening with this weekly session out here? Right now, it's just a little doji candle. We had a doji last week. Is that a big deal? No, it's only a big deal at resistance. Are we at resistance? No, yes, sort of. We're above resistance out here, so it's not yet clear on the weekly chart inside of Apple whether or not there's any issue out here. Inside of the monthly chart, which is a beautiful thing, price is trading above its monthly profile high, 156.65. This doesn't really matter today. It's only the 17th, but it will matter in 16 days whether or not price has closed above it. But everything still looks bullish inside of Apple. So I hope that helps. And Danny, I did my best to answer your question about the solar eclipse of the moon. And that just says, hey, go ahead and get that dark side of the moon out. Get that vinyl out. Go listen to it while we see that solar eclipse on Monday. Take care, folks. Stay tuned for David White, Tom O'Brien, and Andy Heck to finish it off. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.